Brian Hoops. How's it going, everyone? Brian Hoops here, Midwest Market Solutions. It is Tuesday, November the 3rd. Thanks for joining us here for our latest internet video series. We always appreciate any comment or feedback that you may have, so don't forget to check us out online at midwestmarketsolutions.com, where you can sign up for newsletters, our Twitter feed, or text message service, anything that you need there, and always contact any of our 6 offices around the Midwest if you have any questions on what you hear here on our video series, or if you want to open an account with any of our brokers in our 6 offices, we'd be glad to talk with you. Before we get started, let's look at our disclaimer here. There is a risk of loss in trading futures and options, and it can be substantial. Each investor and trader must consider whether this is a suitable investment for them. Past performance is not indicative of future results. We do not guarantee that the information is accurate or complete, and it should not be relied upon as such. There is no guarantee that the advice we give will result in profitable trades, and everything that you hear here is copyright 2015 by Midwest Market Solutions. Tonight, we are going to talk about the upcoming supply and demand report. I think it could be a big one to the market, as we've been pretty quiet in the marketplace, and imagine we're going to see something come out of this government report to give us a change in our basically stagnant direction that we've seen in the corn and the soybean market. So we're going to talk about that here in a second, and what some possibilities are going forward. What you see on your screen is just a simple spreadsheet that I made using Microsoft Excel. And I have on the left-hand column our production, our yield, our acreage, and our overall production for the corn market as the USDA has released it back in the month of October. So we're looking at this column right here. Our carry-in stocks, our exports, our demand, and finally our ending stock that the USDA gave us of 1.567 billion bushels. So we are using a lot of corn. Our demand is 13.755 billion. And you can see this year we carried in 1.731, and we are actually, if you look at this from the standpoint, our demand is 13.755 billion versus this year's production looks to come in around 13.591. So we're actually decreasing ending stocks, and we did one of these internet video series back in the spring before the growing season started, and this was the trend that we had anticipated. And in fact, if we had seen a yield that was much smaller than what we have grown this year, we could have had explosive market prices in 2015. But as it was, we did not. And just to give you an example of what potentially could have happened, if we would have had a yield of maybe, say, a 160 this year, you can see our ending stocks would have tightened up to under 1 billion bushels and around this 920 million bushel area. So it would have been an explosive summer. It did not happen, as we had a great growing season. And let's talk about what potentially is going to happen here in the month of November. Now, this morning, Informa came out and they revealed their production figure, and they said it was 170.1. And so you can see I'm putting this in this November category. I'm putting the yield in there and leaving acreage the same. Production, total overall production increases by about 170 million bushels when we change the yield by 2.1 bushels per acre. We leave the demand the same. No changes there, but our ending stocks increase by the same amount as our production. So now we're looking at a crop situation where we actually produce 13.76 billion, and we use 13.755 billion. So we are production is outpacing our demand at this point. So this is what Informa is telling us. We can expect ending stocks to increase to 1.7. Now that's not overly burdensome, but it is likely to push corn into that 360 to 365 long-term weekly support area. And I think you're probably going to see some sort of a move like that either prior to the report or after the report's release. When we talk about marketing, when you look at what potentially could happen when you're looking at future price trends, you have to look at what if type scenarios. So let's say the USDA does back off yields, and let's say they drop them to this 166 area. That'd be down 2 bushels an acre. You have cut ending stocks down to 1.4 billion bushels, which doesn't give you a bull market, but it does push you back to the $4 area. So we possibility could reduce ending stocks, but I've heard from a lot of producers that this 170 and maybe even 171 is realistic, and that would be a 3 bushel an acre increase over what we saw back in October. If that happens, that is a negative number and 1.8 billion bushels of ending stocks. So that's certainly enough to push us down to the 350 to 360 area and give us very limited upside until we get into the spring and summer markets. So this corn market is one that is fairly evenly priced right now, and if you remember last year in 2014, wheat fell as low as about 320 last year, and that was when we had ending stocks of around 2.4 billion. To get anywhere close to that type of a scenario this year, we need to have a 10 bushel an acre increase in yield from one month to the next. I don't see that happening, but if that happened, that would be certainly bearish enough to suggest that any stocks of that 2.4 area. And even if we do have that happen, I don't know that necessarily drops us very much in the marketplace. I think you actually go to the 320 area. So point being here is most likely scenario 170 to 171. We do increase ending stocks if we have that scenario, and we drop to 360 to 365. If we would take yields the other way, maybe in the 166, ending stocks tighten up to 1.4 billion, sets us up for next year. We're going to have to bid for some acres. As you see this production number, a pretty big shortfall compared to the demand by over 300 million bushels. So even a yield of 166, which would be the second largest in history, doesn't replenish our stocks, and I think sets us up pretty nicely going into spring and next summer. If there was a market that I wanted to store a crop in, if you had limited choice of sell corn, sell beans, store corn, store beans, I would be storing the corn because of the possibility that this relationship between production and demand and our ending stocks tightening going into the spring and the need to buy acres. Let's look at the soybean market, as it's a little bit different here. And again, we're using the same format here. Production, yield, acreage, carry-in stocks, export demand. All this is filled in here in this October report given us from the USDA. This ending stocks number is real troublesome here. I think we're fortunate for producers that we're hanging around the upper $8.80 area. We've traded between 875, 925 in the spot futures for quite some time here, and given this ending stocks number being double what we've seen over the last 8 years, I think we're fortunate. Here's the problem as we go into the fall, into the winter months. Informa says 47.9. Okay, so we type that in. That increases our production by 58 bushels per acre. But because our demand and our exports have not kept pace with what the USDA has forecast, I don't see any changes really in here into this demand. That means that this change goes all into our bottom line. So our ending stocks increases same amount as our production. We're up 58 bushels per acre in our ending stocks. We have a 482 million bushels of ending stocks. That's certainly not a bullish number. And what happens if instead of a little over half a bushel an acre increase, what if we do let's say 48.7? That's a bushel and a half acre increase. I've heard some phenomenal soybean yields this year. Look at this ending stocks number. It is 548 million bushels of soybeans. It is a huge amount of soybeans. Look at our carry-in stocks for this coming year, 191. And now we've increased these stocks numbers by a huge amount. So this is my big fear, is not so much for higher prices, but that prices move sharply lower if we would get a bearish number either in this report or in the final number in January. So we can play with these numbers a little bit again. Maybe yields aren't as good. They dropped to 46. Well, even if you get a acre or a bushel per acre drop in yield, you still have any stocks at 324. Well, that's a pretty good drop, 100 million bushels, and you could trade 50 cents higher off that news. But I'm more inclined to be fearful of something like this, that increases our stocks to 548 million bushels. So a lot of producers have come to us and asked for questions what to do with their crop. Looking at this stock scenario, I would not want to hold my soybeans. Like I said, if there was a market I'd want to hold, it's the supply-demand relationship. It's the corn market this year going into the spring. That's the market that needs to buy acres. Soybeans, if you look at this, either one of these numbers, the market's telling you we have ample supply of soybean stocks on hand. We don't need to produce more in 2016 in the United States. We need to produce less. We need to produce more corn, less soybeans. This is the crop I would look to be selling and letting go of the corn. All right, that is going to do it for tonight. Again, give us a call if you have any questions, want to hear some feedback on this. Appreciate that very much. You can contact me at our website, MidwestMarketSolutions.com, or give me a call directly, 417-501-5132. We want to thank you for your participation in tonight's meeting, and in the future, please contact us, any of our 6 offices, for more info. Have a great next several weeks. I'll be back on soon with our next internet video series. This has been Brian Hoops.